price of silver is volatile. It goes up and it goes down, usually several times a year, and the movements are pretty drastic. And when it's moving up, there's a certain group of people, and you probably have seen this, who consistently will start talking about how silver is going to go to $200 an ounce, $300 an ounce, $500 an ounce. Sky's the limit. It's never going to end. The moment it crashes and it goes down, they start talking about silver manipulation. I understand where all the talk of silver manipulation comes from. I've listened to people describe, how J.P. Morgan has these positions and how there's paper investments that people are treating as if they're silver on the market, and how sometimes these paper positions flood the market at specific times in order to drop the price. However, this does not account for the base price, which it equalizes to over time. And this is really clear once you actually look at the consumption percentages per industry. Now, according to the latest numbers that I looked at, which are a little outdated, so give or take a few percentage points, the bulk of the consumption, 53%, is industrial uses. 13% is photography, and 24% is jewelry and silverware. So that makes up 90% of the market, which is not investment related. Now on the investment side, you got about 7% coins, 2% pure investment, and 1% de-hedging. That's clearly the minority of the market, 10%. The minority. So whatever moves happen in that segment cannot be as important as the industrial sector. The rest of the market, that 90%, the vast majority, is just supply and demand. The factors, they want to produce a product and they need silver. They try to get it at the lowest possible price. The miners, they're trying to produce the silver and they're trying to sell it at the highest possible price. So the market is going to equalize to a base level. There's going to be some movements upward and downward. That can be manipulated by investment, yes. But in the end, when you have 90% of the market being driven by industrial consumption, and you consider photography and silverware, those are a form of industry, then it's going to equalize at a natural price that people are willing to pay. You're not going to be able to manipulate that higher or lower for any significant amount of time. And when you look at those numbers, it should be pretty clear that when people start talking about silver manipulation, what's really happening is that they're trying to justify and explain away the fact that the market really doesn't match this artificial paradigm that they've been trying to apply to it. Now, the paradigm that people are operating from when they talk about this is that when the dollar collapses, there's going to be a mad rush into silver to hedge themselves against inflation. But what they're not accounting for is that at the same time, there's going to be a collapse of industrial consumption because people are going to be buying less computers. People are going to be buying less consumer electronics. And maybe 5 to 10, 20% of the population goes into silver. I think that's a little bit optimistic. But even that amount of people coming into the market isn't going to compensate for the collapse of the industrial market.